What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. I hope you're doing well. Talking today about mortgage rates. The average mortgage rate is now above 7%, at least here in Vermont. About the best rate you can get is right around 7%. So if you don't have the best credit score or for whatever reason you can't get the best rate, you are likely above a 7% rate, which is the first time we've seen that in quite some time. Rates have been floating between 6.35% to about 6.75% for the past 2 or 3 months now, I want to say. And so when rates are up at 7%, I mean, last week, for the most part, rates were around 6.5%. So with rates around 7% this week, it's really a significant jump and the first significant jump that we've seen in a while. So what does this mean for you as a home buyer and seller, and how is this going to affect the overall housing market? So let's get right into it here. We're going to go over to NEFCU first and just see where I'm getting this data from. So this is New England Federal Credit Union, or NEFCU. They post their rates online and update them, I believe, twice a day. So this is about the most accurate data that I have access to as a realtor is NEFCU. And of course, everyone has access to this. This is just on their regular website. They typically have just about the best rates around. You might be able to find some slightly better at other lenders, but for the most part, they're pretty good. Their rates are pretty hard to beat. So 7% as the best rate. Is this going to affect home prices? Are we going to see a home price crash? What does this mean for you as a home buyer and seller? So I know I probably sound like a broken record to a lot of you listening to this channel, but we haven't seen home prices come down when rates are at 6.5%, 6.375%. With rates being there for a while, rates haven't come down. Month over month, they've ticked up, as we can see here by this orange line in Redfin's graph. And they're just about where they were at the peak of last year. So they're down 0.3% year over year, which is down slightly from its high last year, but we're still right around the high of last year, the all-time high for median sales price, even with rates this high. Now, the 7% rate hasn't fully rippled into the economy yet, into the housing market and into this data. But I think even with rates at 7%, I personally don't think that's going to affect much. And why is that? The affordability is really low right now, right? With median sales price near its all-time high on a national basis. Same thing with Vermont. Vermont's down 0.4% year over year for single-family homes and condos, at least here in Chittenden County. So it's right at its all-time high, and mortgage rates are way up there, way above their all-time lows and way above where they were this time last year. So why would home prices not come down if affordability is so bad, right? The theory is if people can't afford the home at $500,000 and need to lower their monthly mortgage payment, results in the purchase of a $400,000 home instead of a $500,000 home, then that should cause home prices to come down because people can't afford to pay the mortgage for a home that expensive, right? That's the theory. But what we've seen in practice this year is so many people have locked into mortgages at a low rate. So many people have mortgages below 6%. Some are even at 3%, 3.5%, 4%. So when people have mortgages that low, do these higher rates really create a supply and demand imbalance that is going to cause home prices to drop? And so far, the data is showing no, it does not, right? If median sales price is staying high at its all-time high, albeit it did come down last year when people were adjusting to what the market was going to do, and it might come down on a seasonal basis like we've seen in the past moving forward. But we haven't seen prices drop out, at least not this year. And many people were expecting that with these higher rates. But in practice, what happens is these higher rates do bring down demand. They do bring down demand. They do hurt affordability. But what they also do is they discourage sellers. Because if you're locked into a 3%, a 4%, a 5% rate, and you're going to sell your home and purchase at a 7.5%, specifically, or especially if your home is going to be more expensive than where you're living now. And that's a lot of the people who would choose to sell are the move-up buyers, the people that purchase their first property and are going to move up into something a little bit more luxurious. Now, if they're going to do that at a 7.5% rate, it's a lot. It's a big sacrifice for these families. And so as a result, there's less inventory coming to the market. So even with these higher rates and the low affordability, there's still people that have a mortgage payment that's very affordable, that is a low interest rate. 2021, I believe, was the most affordable. The affordability index was the highest that it was in recorded history. And that's because mortgage rates were so low. Even with all those bidding wars, people could afford to pay a lot for a home and still have a low mortgage payment. And some people, if you were lucky enough, locked into a low enough purchase price with the low mortgage rate that their home is very affordable right now, especially compared to where things are right now. It's especially compared to where prices and mortgage rates and overall affordability is right now. So that's what's going on. That's why we're seeing prices rise at the same time affordability is decreasing and mortgage rates are rising. Now, will we see a crash come into the future? I know a lot of people are talking about it, and really what we need to see is we need to see inventory rise. If we're going to see home prices come down, we got to see inventory rise. And if we look back in 2008 in that crash, where what we saw was a buildup of inventory over years, at least here in Vermont. Now, Vermont didn't experience a major housing crash in the 2008 financial crisis, but other parts of the country did. And a lot of people, inventory started to rise in 2005, 2006, 2007, leading up to the 2007-2008 crash. And right now we have inventory at an all-time low. So if we see inventory start to rise with affordability being this low, then we might see prices start to come down and start to crash. Or, if we see the unemployment rate rising, again, along with inventory rising, then we can see prices start to come down. But right now, if we go back to the Redfin data here and take a look at the national stats, see homebuyer housing payments up 13% from a year ago, which is essentially affordability. New listings are down 24%, right? These are the sellers coming to the market. The new listings are the sellers bringing their homes to the market, where inventory are the people who want to sell their home, but it's, it might not sell right away. So they're related stats, and it's a little bit confusing, but inventory, I think, is more, in this active listings is the inventory on there. That's what you want to watch if you want to see a home price decline. I think we need to see inventory go way up. You can see we're way below 2020 levels, where 2020 was below 2019 levels. We're about 10% below 2022 levels, which inventory was still low then, albeit it was climbing. The red line is 2022 on your screen. And then the orange line is where we are today. So, inventory remains low. So if we're going to see a price decline across the country, I know some markets are already seeing this, and I believe, just looking at the data and looking at things from afar, the places that are seeing prices come down are places where inventory outweighs demand. So if you look at your market and there's more inventory than there are buyers out there, then you're gonna, you'll be able to find good deals, and the median sales price might be coming down. Here in Vermont, and I know in a lot of other parts of the country, and at least in the national stats that we have, so demand still outweighs supply. So if inventory begins to build, then we have a higher chance of prices coming down. So what do you do as a home buyer or a home seller? I mean, it's really the same story that I've been hammering in. This 7% mortgage rates, I think what this means for you as a home buyer and a home seller is things are going to be, it's going to be more of the same, if not maybe even more exaggerated of the same. Now, we could see home prices, or we could see supply start to increase because interest rates are rising to a point where demand will outweigh that supply. Even though there's not many sellers, there hasn't been many sellers for a while now, and if interest rates keep rising and that keeps chunking or hitting away at demand, then we could see supply outweigh demand. But in my opinion, I think what's going to happen with these 7% rates right now is we're going to see more of the same, and potentially an exaggeration of what we've already been seeing, where we're going to see even less sellers because of these higher interest rates, albeit we might see more builders I know new home starts are way up. Builder sentiment continues to rise because sellers don't want to reduce their prices. Sellers aren't bringing their homes to the market. So if people aren't selling their homes and there's a lot of buyers out there, that means builders are going to bring more inventory to the market, which is honestly great. It's what we need. We need more inventory. So as a home buyer or a home seller, I think, buyer, it's the same thing as always, and seller, it's the same thing as always. As a buyer, you want to look for a home that's been on the market for a little while, try to get a deal, although sellers are still very sticky on price. Just because they don't have any offers and they've been on the market for 2 months doesn't mean that they're going to accept an offer that's well under list price or even a little bit under list price. I've run into a few of those situations today, or not today, but recently. As a seller, what you want to do is you still want to attract multiple offers. If we go to this Redfin data here, we'll see that across the country, homes are selling for above list price. 37% of homes sold for above list price. The average home sold for 101% of list price. So homes are still selling for asking or above nationally. I know here in Vermont, it's about 105% of list price. So you want to price your home attractively. You want to get multiple offers. That's going to put you in the best situation in the current market. So let me know what you guys think. Do you agree with me? Do you disagree with me? I always love hearing your comments. If you're looking to buy or sell a home here in Vermont, reach out to me directly. I'd be happy to help you. If you're looking in another part of the country, reach out to me directly. I would be happy to find you a great realtor, someone who knows what they're doing, so you're not stuck, trying to learn everything yourself. So you have actually somebody who knows how to do their job, which there's a lot of great realtors out there, but you don't want to be stuck with one of the ones who aren't great. So anyway, let me know what you guys think, and I'll see you guys in the next video.